And JP Morgan, Citi, and Bank of America, just a few of the financial giants getting ready to report quarterly results. We're going to hear from them this week. Leslie Picker joins us this morning with a bit of a preview of what we can expect and what we should be looking for. Good morning.
Hey, good morning, Andrew. Yeah, those big six U.S. banks are up 33% on average just over the last 3 months alone. And they're set to report second quarter earnings over the next 2 days. The street is asking whether the valuations are getting a bit stretched here or whether the new numbers and commentary will catalyze further to the upside. On average, this cohort is trading at a 27% premium to its 10-year average when compared with the next 12 months projected earnings. And with the tariff, inflation, lower income consumer health, and rate uncertainty, there are still some macro risks circling the sector. Now, on the flip side, we've seen a dramatic shift on the regulatory front, with reforms expected to loosen capital requirements. Banks are expected to redeploy what's now excess capital in the form of buybacks or M&A or additional loan growth if demand is there. Additionally, global M&A volume is higher by 25% in the first half of the year, driven largely by some of those bigger deals that we've seen, while IPO volume is up 14%. Equity trading is also expected to have another banner quarter, and analysts are expecting net interest income to help bolster the bottom line this quarter thanks to loan growth. The key question is how much of these tailwinds are already priced in at these levels, though, guys?
Did you see this piece in the Wall Street Journal this morning about JP Morgan and Jamie Dimon and private credit by any chance?
Yeah, private credit's obviously a huge part of this whole kind of existential question around loan growth and banking, right. And JP Morgan has some on-balance sheet exposure, yeah.
Should we be worried about that, though? I mean, one of the things that was so interesting about the piece was Jamie has been quite public about, I think, concerns about what the private credit world could portend in terms of, if there is a financial crisis, is that where, the risks lie? And yet the piece also suggests that JP Morgan wants to take advantage of that marketplace.
Yeah, absolutely. So I think there are two sides of concerns here. Jamie has been the one who's been very out front and vocal about, when SHIT hits the fan, what's going to happen? Do these private credit shops have kind of the know-how to work out situations in terms of bankruptcy? And then on the flip side, there was a report this week. I can't remember. It was from one of the big credit firms or credit ratings agencies that said essentially that private credit is safer than the banking system because it is, it has kind of longer duration exposure. You're not at risk of some sort of a bank run situation. And so therefore it's safer for the entire system. So there are kind of two sides of the coin. But banks have been, at least over the last few years or so, heavily exposed to this area in terms of their extending of credit to the private.
People can spell, Leslie. I mean, that excrement hitting the air conditioner is always a good.
I was like, I don't know. Can I say that on air? I don't know. I don't think I can.
It's almost like saying it. It's almost like you can say Shih Tzu, like a dog. That always works.
Yeah.
The Shih Tzu hits the fan.
I should have done that next time.
Air conditioner, excrement, air conditioner is good.
I think my 8-year-old can spell that word.
Yeah, I think I got it.
Thank you.
I got it immediately.
Appreciate it. We got it.
I got it immediately.
I'm slow and we got it.
Yeah,
so there.
Exactly.